Quick, if you had $100, would you invest it into Lyft, Pinterest, or Zoom? Each of these unicorn startups went public in the last few weeks, and each of their stock prices have done very different things since. Stick around as we explore why. Welcome to Marketing is Broken, the weekly series where we serve up the marketing news that unicorn foals need to grow up big and strong.
That's how I got so strong. Giant's milk.
Lyft, Pinterest, and Zoom recently went through their initial public offerings. In the weeks and days since, Lyft's stock has plummeted, Pinterest is way up, and Zoom has wobbled a bit but is gaining some ground overall. In Lyft's case, the company priced initial shares at $72 apiece, which would have made the company worth more than $24 billion. At the time of writing, Lyft's stock price was currently sitting at around $57, or 21% below the IPO target. Analysts point to heavy competition from Uber, no sign of profit anytime soon, and regulatory challenges within the transportation industry as potential risks that could be dragging the price down. For Pinterest, stock prices have risen from $24 to nearly $30 per share, which is close to a 25% increase. Despite also not being profitable, Pinterest does appear to be making strides in this category. In 2018, they increased average revenue per user in the US by 47%, and they cut their losses from $130 million in 2017 to $63 million in 2018. And finally, there's Zoom. The video communication platform opened at $62 per share, jumped to nearly $70, and has since settled down to $66 per share. Of the three startups, Zoom has the sexiest financials too. They grew 108% year over year in the fourth quarter of 2018 and are already profitable and generating cash. That's about as good as it gets in startup land. IPOs are fascinating because they're one of the biggest and most important tests that a brand can face. It's the moment where its value shifts from being determined by customers and a handful of deep-pocketed investors to being set by the democracy of the entire stock market. It's also the moment where the value of a company is untethered from the realities of capital and labor and can be shaped and grown on the strength of its brand. We wanted to know more about what it takes to make it in the tech startup big league, so we sat down with Gia Lottie, co-founder of Elevate and co-host of Forget the Funnel, to get her thoughts on how to turn startup brands into household names. You've advised dozens of startups. What are some of the biggest misconceptions that people have about marketing and growth for startups?
Many, but I would like to say they do a lot of things right too, instead of just going on the attack to what mistakes are being made. Although, there's obviously a lot of mistakes to be made by first-time founders and second-time founders for that matter. But a lot of the founders that come to me, they come to me, sort of after the product is launched and after they see sort of growth has slowed or acquisition is all of a sudden this like emergency for them. And they're like, we need a marketing strategy. And it kills me because I wish they had come earlier, or I wish they had sort of solved for marketing earlier in their evolution as a company. So I wholeheartedly believe that marketing should start day one, even before the product is launched. There's a lot of reasons for that, but one of the reasons why it is overlooked so often is because startups tend to be founded by people who don't have a marketing background. And so they may have this sort of misconception or these sort of negative connotations attached to marketing, like blue pen marketing, or more sort of traditional side of marketing. Like, we don't need that. This product is going to be amazing and it's going to sell itself, so to speak, build it and they will come. Which I think, the vast majority of us know that build it and they will come is not a thing. But in the early days, it can be hard to sort of prioritize marketing when you're in build mode. So that's a lot of what I see especially on the software as a service side, and building sort of software solutions. I see that a lot. And what that sort of leads to is this scramble at one point where they're like, well, acquisition is a big problem, or their, investors are like, what's going on here? We need to see more acquisition because it's obviously a really important indicator of growth and sort of overall health of the company and success and trajectory. So they start to look for a marketer. And they want a CMO or a VP. And then they quickly realize, especially in the software space, that very experienced or senior sort of CMO level or VP level or even senior director level marketers are scarce. There's not that many, especially in the SaaS space. It's not a very, it's a quite a young industry. So there's not that many people that can actually say they've been around, in SaaS for, 10, 15 years. So they quickly realized that experienced marketers are very expensive, very busy, and scarce. And so they do the next best thing, or they do what fits within their budget, and they hire somebody mid-career, which is a great option for sure, except that their expectations for what that mid-level or mid-career marketer can do is a little out of whack. And then that marketer tends to struggle a little bit. They're not given the sort of space they need internally. They're not supported enough by their founders who fundamentally don't understand marketing for the most part. And they're really, really desperate to deliver results. So they do things like read blog posts and listen to podcasts and do all of this, they try to implement tactics that they hear that work for other companies, except that obviously fundamentally what's wrong with that is that it's not focused on their customers, identifying who the best customers are, and really getting intimately familiar with what those customers need and what they want, and sort of developing a strategy to attract those customers, as opposed to throwing spaghetti at the wall, which a lot of us who didn't know what we were doing early days, that's what we did, right? We just was guessing. So that happens a lot. And actually, that's part of the reason why we started Forget the Funnel workshops, and also my company, because those mid-career marketers are really ambitious and they can work their asses off. If they're properly supported, they can do a ton. They just don't tend to get enough support internally.
Yeah. So it sounds like it's a pretty slippery slope from day one if it's not a focus.
Yeah.
Now, you mentioned marketing is really important, but what about branding? At what point should a startup focus on their branding efforts? Is that day one as well, or is there a different?
100% it is day one. And I equate, not all marketing is branding, obviously, but brand is a huge component to marketing. So obviously, maybe you don't have a full-time marketer from day one, but somebody at the company needs to be very focused on brand from day one. And there's a lot of reasons for that. Not only attracting customers, but also attracting team members and talent to the company. Brand is so important in doing that. Our desire now to work for a company that we believe in, that's doing something that has purpose, and that the team behind that brand is a team that we would want to work for. I think a lot of startups actually fall short on the brand side of things because they're like, no, it's about products, it's about what we're building, and they forget that brand is actually really important. For some founders, it comes really naturally, and sort of advocating for their brand or communicating on behalf of their brand or telling their brand story comes really naturally to them. But there's a lot of startups that's not the case. So if there isn't somebody internally to take care of that, then having an early hire be responsible for that, putting that best foot forward, is really, really valuable, even very early days, if a founder isn't equipped to do it themselves. So one thing I would definitely recommend that early stage founders do early on, and this is like really, really easy. Google Ventures has a 3-hour brand sprint. I think it was Jake Knapp. I think his name is Jake Knapp, and he's also credited a couple other people in this article. But if you go to Google Ventures website, there's a 3-hour brand sprint exercise that you can run through. It literally takes 3 hours. So it is very hard for anyone to disagree with that time is valuable. But if you can, especially as you get past the founding members, but you have some early hires, if you can do a 3-hour brand sprint, it's not a perfect process, but it's very good. It's close to perfect. There's a couple things that I would change, but just that exercise honestly could make a sort of world of difference when it comes to how you communicate on behalf of your company, the language that you use, and making sure, very importantly, making sure that everybody that's on the team is super aligned with what you're building and why you're building it, and like what gets you out of bed in the morning.
Right. And of the 3 companies that just went public, Zoom, Pinterest, and Lyft, which one do you think is going to be doing the best a year?
I will pick Zoom, and the reason for that is I think that remote and distributed work is going absolutely nowhere and is on, the path to absolutely explode in the next couple of years. It's already exploded, but I think it's even going to get bigger. So I don't think Zoom is going anywhere, especially if they can sort of perfect what they do. I don't know that they've 100% perfected it yet, but I think if they can make a couple small adjustments, they are going to absolutely explode.
Gia, Lottie, thank you so much for your time.
Thank you so much for having me.
What company do you think will be doing better a year from now? What do you think the stock performance of each company says about the brands? And what do you think it means for any other unicorns looking to go public in the year ahead? Share your thoughts with a comment, and you might just win yourself some new Brandish Insights gear. We'll see you next time. Hey, it's Josh from Brandish Insights. Thank you for watching Marketing is Broken. If you like this week's episode, please click below to subscribe or check out other episodes. And if your company could use more insights around your branding efforts, check out brandishinsights.com.